we're gonna talk about tonight's my three favorite my three favorite indicators: 10, 20, and 200. Because as you know, I've been searching in this journey of like, how can I simplify my freaking chart that I can rely on these indicators. There's so many. There's like hundreds of many different indicators, and they all work. And I've watched other videos, many other videos, other people using them, and they make money with them. But the 10 and 20 SMA was my favorite ever since BMADS introduced them to me. I was like, dude, I used to use VWAP, right? Everybody know what VWAP is?
Yep.
Not the other VWAP, but
Volume volume weighted average price.
there you go. Um, so I
I
used to
remember.
use the VWAP, and I was like, man, this is like the magic sauce. And then you learn about like the previously closed. I'm like, oh, this is cool. And then learn about like the Fibonacci, the RSI, the freaking stochastic slow, the volume profile, the cloud. If you look back to all of our previous coaching sessions,
Yep.
I had them all in my charts. Remember that?
No. Dude, I was there. I remember we went through so many.
I was like, oh my God, this is overwhelming. And we were trying to make sense of it. And then finally, I was like, you know what? They all work. But then the question is, when do they work? You know?
Yeah.
And so I was like, well, if they all work, I gotta freaking pick one and let the other ones go away to keep the charts clean and less noise, right? And so I've been really testing the 10 and 20 SMAs, matching it and comparing it with all the other ones. And based on my discovery, and you guys should do the same thing, is out of all the time frame, and as you guys know, like I can snipe my trades on my entries as far as the tops and the bottoms, the support and resistance, literally by just using the 10 and 20 SMAs. And then here's another thing. So I preached before, guys, always look left, right? Always look left. Um, at first, that I put more weight into looking left, right? I used to put more weight. So if I say, like, let's say on the hourly, right here on this chart here, the one
Are
hour,
you recording this?
yeah, it's recorded. You guys can see my screen, right?
Yeah.
Okay. So this is recorded. So on the hourly, right? I'm like, all right, guys, my favorite time frame to analyze a trend or a potential setup to trade is the 1 hour. So I say, hey guys, zoom out. Let's go. Let's go pick a different stock that's more reliable to chart. So it's Tesla. Okay, Tesla. I'm gonna delete all this. No, not that way. Delete. Okay, so Tesla, 1 hour time frame. I'm like, hey guys, okay. The first thing I do is, look for the support where it's currently at. Why is it right there right now? Do, do, do. Trying to make sense of it. So it's right here right now. Okay. So I'm like, okay, that's where it's at. So this is support, and then you draw a line here, and then you draw a line here, right? Ideally, you want to find your three levels, three or four levels, two in the downside and two on the upside. So that's my process. So before I used to put a lot of weight into this, like the holy grail. Hey, this is touching the support right here. I'm just gonna freaking, I'm just gonna, buy it. But in that case, what also today was a good example too, which I'll show you the chart. So in this case, I used to put a lot of weight on that pattern. But what I realized is on the 1 minute, 10 and 20 SMA, like this setup is not ready, right? You see this on a 1 minute, okay? This setup right here on a 1 minute, you guys can tell me based on everything I've preached about. What happens when the 10 and 20 are, you know, pretty aggressively pointing down? What is that? What does that mean?
Short.
Downtrending.
Downtrending, and it's a selling momentum. That is a momentum. Like you can clearly see no weakness in these indicators, right? It's straight. It's straight. And then when do we identify that this momentum it's losing its like speed? It's momentum. When do we identify that?
When it's starting to curl.
It starts to curl. Exactly. So in this case, in this example right here, right? This is literally on the 1 hour. This tells me this is a great support, right? And before I would just blindly take this trade, which is not really blindly because I trust this setup. So therefore, it's my signal that makes sense to me that hey, this is support. It should bounce. It should bounce. But the truth is, it's not ready, right? It's not ready because these guys are still pretty aggressively pointing down until we start to see curl on this guy right here, like maybe even just an angle like this, like which you will see, right? When there's an angle on those, the 10 will typically present it first because that's a weaker SMA. So when the 10 starts to present itself, then let's say this level hit and then this green candle presented itself and then it presented the curl on the 10, then that's when I know that hey, this is getting ready. This area right here, there's buyers coming in. So therefore the momentum on the 10 SMA is getting weaker, right? So then I go, okay, let's wait it out. Let's wait it out. What you want to see is the 1 minute, right? And then on the 5 minute is your target. Okay, so I'm going to delete all this again. I'm going to give you a clean chart here. So as you can see, on the 5 minute, the 10 SMA is your target overall, right? Because this is a major support level. So once you see this on the 1 minute starts to curl up on your 10 and 20, then your target overall is the 10 SMA on the 5 minute because that is the next time frame for potential move. You can scale it down to like 2 minutes, 3 minutes, 4 minutes, right? But then you're gonna see all the noise in between. You're gonna see all the noise, which those are accurate as well. Okay, so I'd like to just go from 1 minute to 5 minute to 15 and then to 30 or 1 hour. The 30 and 1 hour is pretty close. Okay, so if I see the 1 minute starts to curl on the major support area, instead of buying without waiting, I need to wait. And I'm gonna show you guys an example, like I said. Okay. Um, typically it will chop in between the 10. So once this candle, let me see here, size it up again, go here, and once this candle goes up like this, right? I'm gonna make this white so you guys can see. It's default. Okay, there we go. So once this candle shows like that, why is this got? Hang on. Da, da, da.
It starts to bend the 10 SMA.
Yeah, that's gonna start to bend the 10 SMA, but the probability of that candle coming down to start do this is pretty high, right? And what you want to do is you want to see candles to start to do this, right? Or like this, right? It's gonna start to do this. As long as you have higher lows like this, that is literally the transition into from a major support area. This is your entry, okay? A much better entry is when your your 10 SMA, it starts to do this, right? And now you have this guy right here above, gosh dang it, above the 10 SMA, and your 20 is gonna start to do this. Okay, it's gonna start to do this, and then this crossover right here, the crossover of the 10 and 20, is your ultimate prime setup, right? Because now you have that basket going on. Now the candles is gonna look like this. Okay, it's gonna look like this on the 1 minute. On the 5 minute, okay, on the 5 minute, like I said, this is going to be your next resistance because the 10 is going to come down to here, right? The same thing with the 20. And then you basically repeat the same scenario, what happened right here, okay? So once this come up, and now it hits the 10, right? This is the 10. Once that candle touches this, okay, you're going to have another repeat scenario. You're going to have a rejection, okay? It's going to start to do this and then repeat itself again, like this, okay? That's what's gonna look like. And guess what that pattern is, right? That pattern is our pattern that we talked about all the time to go long, okay? That's like this, okay? And literally, you rinse and repeat this pattern into the 15 and then the 30, and then it'll just keep, it's a self-fulfilling prophecy um, by using the 10 and 20 that way, okay? Now let's talk about the 200 SMA. So the 200 SMA is I mean, there's the same thing as the 10 and 20, but the 200. So it's calculated as 200 candles to the left. That's the average of it, right? And it's been super reliable. You can see it on the 1 hour right here. Okay. So it got up above, right? So we know this is hard resistance, but it stayed above it, right? Right at the open, it dipped down. So it came up, dipped down to here, and then boom, shot up. And then it dipped down again because now we're above it. But guess what? This 200 SMA, what does that tell you? It's still gradually pointing down, right? So there's still selling momentum from this overall big picture, right? So what we want to see on this 200 SMA is we want to see this starts to curl up overall like this. And then once the candle is up here, right? It won't happen right away, but once the candle is up here, now your chances of really shooting up further is pretty good, okay? Especially if you're seeing it on a 1 hour. It's the same concept if you were seeing this on the 1 minute. So let's go on the 1 minute. Zoom out, okay? On a smaller time frame, so you can see it right here, right? The 200 SMA is pointing up, and then now it's dipped down to here. We have buying momentum from the 200. It came up, it washes down, it pops up, okay? It washes down, it held again because you still have buying momentum here, and then it finally pops up, and then it sold off, and this was an aggressive break. So this break right here, you can see it, that there was no doubt that there was starting to curl down, right? You can see it right here. It's not as aggressively pointing up. So then you could say, hey, this broke. Let's clean this up again. This broke one, the 10 and 20 SMA, right? The crossover right here, the crossover, that's even more conviction. So now every pop on this candle, you could short, right? And then even a better confirmation below the 200. Once you fall below the 200, it's piece of cake, and then you can ride that all the way or until you get a break to the upside again, like this guy right here or this guy right here. These are your exits. But if you were to calculate that box of how big of a gap that is, okay, that's that's your win. So let's say you went long right here. Let's say you went long in this candle, right? And you didn't take profits on that run, but you had to stop out down here. And if you measure your loss from this entry to this exit right here, I mean, ideally you should have exited somewhere up here because that's a crossover. Your confirmation for more downside was below the 200. Okay, so if you measure that, you can see how big of a loss you took, and then look at your wins. One, two, three, a little over 3 times from what you lost, right? So that is the idea on how to use the 10 and 20. And we're gonna clean this up again. And another confirmation why the 200 is reliable. So let's say this sold off and you're like, hey, it's dipping down to the 200. I'm gonna load the boat right here and hopefully it holds. Well, it did give you that bounce. It's small bounce, but then you could have um, told yourself that, hey, look at the 10 and 20 right here. It's pointing aggressively down, right? So with an open mind to say, hey, I remember what we talked about when the 10 and 20 is aggressively pointing down and I'm trying to go long and it's approaching that level, it's likely going to sell off again. So the moment you see this red candle, that should have told you like, hey, there's still a lot of selling pressure here. Okay? Then you would have probably minimized your loss. And if you didn't, you know, took profits here, then this was down here is your confirmation like, oh, I need to get out of the way. This is the hard selling pressure. And this is minutes. You can see this happening. So let's say you did enter and bought that dip. It pushed up. You know the 10 is aggressively pointing down. So you know it's likely going to sell, push back down again. And so if you measure your loss, okay, that's your loss because you try to dip by it to go long. Now, with the open mind again, no emotion, you go, hey, you know what? This is a short setup. Let me go short right here too. And then from there, you rode it all the way down to possibly this guy right here because it broke the 10 and 20, right? And then if you measure that win again from here to here, look at your loss and look at your win, okay? And that, my friend, is why you're able to identify your entries and exits, okay? You can also see, let's see, another thing I want to make an example is you're probably wondering like how are you able to identify this level right here? Let me clean this up again. You'll be like, hey, how can you identify this top here? It's the question. How can we identify this was the top? So now let's draw a line here. Okay.
Or
So
even the bottom of that candle, very bottom. Like we could have take our profits right there because that was a good
yeah,
long
right
range.
here.
Yeah, right there too.
Okay, so let's identify that. So I'm just gonna do a straight line so that way, okay, identifying this bottom right here. So let's figure that out. How can we identify this level and then this level? Okay. So now let's go in the time frames, the 5 minute time frames. Now let's make sense of it. Wait, what day was that? Where'd it go? Oh, right here. Okay. And then on the 5 minute, ooh, baby. What do you see, boys? Can somebody tell me what do you see?
That's a
What
200 SMA
which time frame? Which time frame?
on the 15.
Boom. This is why we have different time frames. Because it literally told you that, hey, you're approaching 200 SMA, you need to get the fuck out and consider that it will bounce there. Don't hope it's gonna blow through, but just be open mind because you got in right here and now you have profits and you need to get the F out of the way and let the stock present itself, right? So when it present itself, you locked in profits right here, right? And you can even go, you know what? I always like the 200 SMA dip buy. And you know what? This is a really big dip, and I want to try to catch that bounce. Maybe not necessarily go all in, but go with like, a quarter position. Do a starter. Once you start seeing green, which on the 1 minute, right? What we're looking for is a confirmation. Like we get especially a big green spike like this, right? You could have bought that dip. You could have bought, let's see what time frame. You could have bought this dip right around here. Right around here was a better confirmation because you can see it right in the 200 SMA right here on the 15. So if you're trading, ideally you want to have this four screen on any stocks that you're trading because you can literally identify where the supports and resistance are based on using different time frames. And then let's say again, example. So we found the bottom. Now we have to find the top here. Okay. Now we're like, hey, how could I identify this push right here in this level? Okay. Can somebody tell me how we could have found this bounce here? What time frame? So this guy right here, right? This guy, how could we have identified that top? What time frame?
That's
What?
the 15-minute 10 SMA. That's all I see it right there. On the 1 hour, it didn't touch it. It did approach it.
Hmm. But what time frame did it told you that it's hitting resistance right here? Because you can't see it on a 1 minute, right? You can't see how far this could have gone, right? This top right here. There's nothing there. If I remove this line, because we just use that as a identifier, remove this line, how could we have identified this top? What time frame do you see that at? That tells you there's a resistance right here without looking left. Because remember, I'm trying to discard looking left right now.
15 minute.
I see it on a 5 minute right here. Look how close that is to the 10 SMA right here. This is live. So
Oh, I was looking at the wrong one. Yep.
this is the 5 minute time frame. So the 5 minute time frame, it told you it bounced hard, right? And then the 10 SMA is aggressively pointing down, aggressively pointing down. And we have to respect them. We have to respect them. If it blows through it, so be it. But as a trader, to lock in your profit because you bought this off the 200, right? And then now you're bouncing into the 10 SMA on the 5 minute. You could have respected the 1 minute as well, right? Say you bought here, you could have respected any of these guys, which is also a good way to lock in profits. If you locked in profits at the 10 SMA on the 1 minute, so be it. That's fine too, right? And then, but the overall move, obviously, it told having an open mind to go, hey, it bounced off of here from the 200. I'm gonna lock in profits off of this 10, right? Because it's still pointing down, but now it's aggressive. So you could have that thought process in your head. You go, okay, this is bouncing really hard, but the 10 SMA is kind of weak and choppy now. Okay, it's not as aggressively pointing down as here, right? So it won't be as reliable. You could put it. So if you held, that's fine. If you sold, that's fine too, right? As long as you have a game plan in your head, that the thought process of what your game plan is what matters. So if you have this trade and you're like, you know what? I like the target of the 10 SMA here on the 5 minute. Let's see if it can get there. Then when it gets there, if it does get there, you can't go, oh, you know what? Let me see if I can go to 200. Oh, let me see if I can go to 20 without locking in profits. Now you're just being stubborn. Now you're just holding and hoping, right? You're pushing your luck, and guess what? It's gonna reverse very quickly, and it's happened to us many, many times. And you're like, oh darn it, I should have freaking, locked in my gains. Da, 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 da. Well, that's your fault. That's your fault, and you have to just own up to it. And I'm just telling you, lock in your profits. You never go broke, and you'll build your account. Okay. Um, so that's how you can identify it. You can literally see it on the 1 minute, 5 minute, 15, 30, or the 1 hour. Okay. The 200 SMA. Okay. Now let me show you a a trade that me and Alex did. Okay. Actually, Alex, you tell the story here.
Dude, this was crazy.
This was Indo. I think
The
this
pre
was
what you were just talking about, hoping exactly happened to me in the stock that I traded and I was holding
Yeah,
all day.
let's talk about that first. What stock was that?
That was
USO. It was USO, right?
USO, correct.
Okay. All right. So I'm gonna delete everything here. So tell me about. Let's go over this trade that you did today on USO, and how many times did I say lock in your profit?
Yeah. So I went green on that. First of all, I made it one mistake that you got to be cautious of is when you're shorting something, you got to make sure that you're clicking the right button. So today I averaged in. I bought it short, and then it spiked up. I was gonna average in some more, so that way I can bring my price down. And instead of that, I sold my position because I was like mentally, I was like, oh, buy. But when you're shorting, you have to hit sell. So one mistake I meant and went immediately like 500 bucks down. All right, fine. So then I immediately went short again because like, oh crap, I know this is short bias, long term. And again,
So
so then
let's try to go over where your entries and exit was too, so kind of get the mental
yeah,
process,
yeah. So
if you
in the
can recall.
morning,
Yeah.
that's exactly in the morning, right when it opened. Shark went in short, and I seen that it presented on the 1 minute. Yeah, right about there.
Yep.
It was
Okay.
below the 10 and 20 SMA,
Okay, I can
and
see
I
that.
immediately went short.
Hmm.
So right at the open as well, it gave me money
Hmm.
right there on those spikes. I didn't take profit because I seen again. I'm see this is dumb. Following a trade according to somebody else, I seen that they're still in the trade. Shark and S Wing was still in the trade. I was like, I'm not stopping out because if they're in, I kind of trust them as more knowledgeable. I'm gonna be in it too. I'm gonna write it down until they stop out, kind of mentality. So I didn't take profits right there. Then I made it, and then it spiked up, um, and I tried to average down right there. After that, candle spiked up, about right there, maybe even sooner,
Hmm.
because I was in the red already.
Yeah, right here.
Yeah, about there. So that was the first mistake I made. Instead of selling averaging, I sold my position. Then I immediately went short again and it spiked up even higher. I'm like, oh crap. All right. Um, and then right there, that one candle that it went down,
This one.
that red one. Yes, exactly. Right there. It gave me enough profit to cover my previous loss and a profit right there. I didn't take that. I wanted more. That's exact position. I was like, dude, I want even more. This thing is going down. That's it. It's below the 10 and 20 SMA. It's going down. I didn't lock in profits, and I rode the whole thing down all day today. And I was red the whole entire day.
So
All those spikes,
you rode this up right here,
all the way.
all
Yep,
the way, all the
all
way
the way.
back down. Did you add
All,
anything else in the way here?
nope, because I already unloaded all my shares. I
Okay,
had
so,
no more.
so you were stuck here, rode it up and down, and
Yep.
then I think you went green some point like right around. No, it was because this is the trade we played. It was right here, I think. So right around
So
here,
about
you went
three
green.
times.
Yeah, right here.
Yeah,
So you went
about three.
green right here. You went green right here.
Yep.
So these ones you didn't take. So you went green right there, you went green right there, and you went green right there, and you didn't take it
Nope.
because your mindset again kicked in of like I want more. I
Yep.
want more.
Exactly.
I want more.
Yep. Again, psychology.
Hmm.
I couldn't overcome that. I was like, I want to cover all my losses because I did cover my losses on the first opening candle. So like I, I'm sure it's going to do the same thing again. S swing again is still in the position. I'm like, I'm holding this.
Hmm. So okay, so another thing that what happened to really lock in the profits. So throughout this whole roller coaster ride, right? Roller coaster, roller coaster. and finally your pain was like enough in this area. You're like, I had enough. Like this has been an eyesore. And I think you sold in one of these levels right here, right? You sold somewhere in here.
Somewhere in there, I sold for a little
But
negative,
yeah,
and then I
you're somewhere
hopped
in
back
here.
in. Yep.
Somewhere in here. Yeah.
And so I went long and short. After I sold that, holding it all day, and I was like, all right, I'm done. So then I was like, dude, a revenge kicked in. I was like, I want my trade to be green.
Mhm.
So I went long. It dipped down. I was like, fudge, what the heck? So then I got stopped out. Went short, and I was in that chop zone on the very bottom right there.
Mhm.
And it went long again. I was red, so I dug myself deeper into red. I was like, crap, dude.
Mhm.
Um, so, anyways, I was negative a bit, about thousand something dollars, and I did scalp myself out
Mhm.
to like 600 $50 loss. But yeah, overall, looking at it, there was so much opportunity for me to actually be green, and a really good amount green if I did follow the 10 and 20 SMA.
Mhm. Yeah, because all right here was, I mean, everything told you that, hey, 10 and 20, you got one crossover, and then two, you got price candle above the 10 and 20, right? And then you have obviously every dip on here was now going against the direction of the 10 and 20, right? So every dip gets bought, every dip gets bought. Every, like any other signals is like the wicks on the bottom of these green candles. Wicks in the bottom of green candles, there's buyer demands, right? So wicks on the top of a green candle is a weak selling, right? Wicks at the bottom of a red candle, it's a weak selling. Okay. So overall, yeah, this could have been with, if with no emotion, you can just say get in and out. This would have been a perfect scenario to, like, you know what, it's above the 10 and 20. Let's just get out. Either wait and get re-enter right here. This would have been another setup to re-enter short because we know we like the 200 and we have a downward pressure, right?
Yeah.
Okay. So that could have been it. The quick little pop-up is fine. You know, you're always gonna have like little bit of room for a potential, overextension. But you know that when it sold down to the 10, as an open mind, this is still a buying momentum. So you should have expected that, hey, this is gonna pop up again. Now we have the 200 and the 10 SMA as a support. So we know that, hey, probable of going up is pretty good. If it sells off again, then now we're using this as a support. Okay, as you can see, it did that until it fell below. Once it crossed below here, now it showed some weakness. This is a sign of weakness. Now the pop-up, you can see a confirmation. Now we're using the 200, the 10 and 20 resistance. Now you have a downward pressure, which is, you like, you know what, this is a good short entry. And then boom, you could have profited right here. So with an open mind, you can read all this. With an open mind, you can literally, like, if you want to leave your emotions aside, you can even just like mind trade this. Just note of it. Just a mental trading. Just say, oh, okay, I'm gonna buy the dip here. Okay, it's going up. It's going up. Oh gosh. Okay, I'm even. Okay, I'm still long. I'm still long. Oh gosh, it broke below. I'm gonna stop out. Okay, now I'm looking at the 200 as a resistance and the 10 and 20 as resistance, and it's pointing down. Okay, this should be a good short entry. Okay, when it pops up here, this is my ideal entry. I don't want to have FOMO, right? So with a clear mind, you can go, you can analyze it and go, you know what? Um, since it broke below here, I could enter right at the 200, or I can add right here at the 10 and 20. Once you add there, this is your build up positions. You already know you have a downward pressure and you have the 200 downward pressure. And then once it confirms, you can add even more right here. So entry, starter, add right here for the build up position, and then full size right here when it fell below the 10, 10, 20, and 200. And then boom, you wrote it down. And if you didn't take any profits, you should have stopped out right here. Okay. So right here, overall, you build that position and that's your win, right? If you really wanted to have the big win, all the way down here, right, on the 1 minute, I can tell you exactly where that stop out is, right, by looking at the bigger time frame. The bigger time frame, let's see, where's that at? Let's see. So in this case, let's see, where was that? Right here, the 15. So when it dipped down, right, you're dipping down into, you went past a little bit, but you could have stopped out like right around here on the 10 SMA, or taking profits right at the 10 SMA on the 15 minutes, right here. So that line you have to respect, that this can bounce back up back to the 20. And that's having an open mind as a scalper, right? It's a different strategy if you're like a swing trader or whatever, like a longer time frame trader. But as
Hey,
a
I was swinging this today.
yeah, you were swinging it, but you had a scalper strategy, but you were swinging the trade.
So why I held on to this, and I did have a stop loss today.
Okay.
So I looked at because I have all my four charts. I have 5 minute, 15, 1 minute, 5 minute, 15, 30, and the 1 hour. So I have all of that when I'm trading one stock.
Okay.
And I looked at the 1 hour and 30 minutes, both of the 10 and 20 SMA. So I looked at the bigger picture, and that's why I rode the whole roller coaster. I didn't get stopped out.
Hmm.
I looked at it as swing as well, was a confirmation that hey, if those educated people are still in it, kind of gave me a mindset. I was like, what do they see? So I'm looking at the 30 minute and the 1 hour, both 10 and 20 SMA are pointing straight down.
Hmm.
Like there was no indication for me to get out. I drew a trend line. I even told you earlier today
Hmm.
from the highest point it reached the highest level right there, 78.59 on the 1 hour. I drew from the top line and and through the candles that it was trading today there, and because about middle of that graph right there, I didn't see the candles what it looked like to the right,
Hmm.
but it was respecting that trend line. Yes, it popped up a little bit, but the candle did not close, so it was still downtrending. So that's why I held my position that long. On the 1 minute, 5 minute, yes, it presented as scalping. I could have got in, got out multiple times throughout that day and make a decent amount of money. But
Hmm.
just because I didn't get out, I was like, I'm not going to give up because the larger picture is still going down. So,
There you go. So yeah, the game plan is good, you know, as long as it was pre-planned that you were gonna hold as long as this trend doesn't break, then that's fine. Um, Going from a scalp perspective, this could have racked up a lot of profits, right?
oh, yes.
You could have racked up a lot of profits based on just respecting the 10 and 20 and the 200 SMA. Okay. Now let's go over the actual trade that got us got you into the green. Okay. So let's talk about this one. So the 1 minute, right? Because we were watching the 1 minute on this. Remember when INDO was crashing, right? And we
Yep.
were we were we weren't even trading this yet, and INDO was crashing, right? And we're watching it, and I was like, oh man, look at INDO is crashing, okay? And first target was the $20 round number, psychological $20, okay? So I said, okay, this is crashing, right? $20 round number is psychological. And then also on top of that, I was looking at the the bigger time frame. So looking left, okay, looking left right there. I'm gonna draw a line here, right here, this top. Okay, so this is on the 1 hour. You guys can see that, right? So right here, I consider that as a resistance or support. Okay, so in that case, you can see it. You can see it on the around the 20. So I started buying. I started buying at the 20. That's a starter, right? And once that broke, I didn't touch it anymore, right? I think I added one more at 19. $19 is another round number. Okay, and
That's
this
where I
is,
got in around 19
yep,
something.
you got it about around 19. And this is what I'm going to emphasize to you about this was a premature entry, right? Because I heavily relied on the support area. on this guy right here, right? I heavily relied on that. Um, and that was a mistake because right here it told me like that was such an aggressive sell-off. The 10 and 20, it's still pretty aggressively pointing down. What I should have waited is this happening right here, which is what I explained. This zone right here, where it started to consolidate, and this is where you want to see like entry at around like around here even like $19. That entry right there would have been ideal. And then the next sell off, this is when I finally added full size. So I added some size on here. And how did I identify this level? Because this has actually got halted. Remember, Alex, it got halted.
Yep.
So when it got halted, it resumed here, and we got in right here, and then this last dip, this is when I went full size. So now to identify that area, okay, to identify why would I go full size right here, okay? Can somebody explain why would I go full size right here after I entered at around 19 and then went full size at about 1750? Can somebody tell me why? What do you see? How do you see it?
Somebody speak. I know why.
Come on, guys. Come on. There's literally you can see all different time frames. Come on, don't be shy. You guys analyzing too much.
That's when I went deep red into like $2,600, and dude, my finger was on the cell. I was like, dude, that's
Hmm.
hard.
And then what like we when you were asking me, Alex, like TJ, what do we do? What do we do? What did I say?
You're like, hold it
I
because
said I like this trade.
it's holding, it's not dipping anymore, and the 10 and 20 SMA started curling.
Hmm. Yep, it's starting to lose the aggressiveness of the momentum. And then on the 1 hour, which is a big time frame, look at where that is, guys. On a 1 hour, right there, right into the 20 SMA on the hour time frame. 1 hour time frame is strong. And guess what else was on that 1 hour time frame? What else was supporting that level? Can somebody tell me? Come on, you can see that on a one time frame.
The 200 SMA on the 1 minute, 5 minute.
On the 5 minute, 200 SMA on the freaking 5 minute. I said,
The momentum is up.
yep, the momentum is up. Exactly, exactly. And I said, load the freaking boat. And then the next level is the next question is, hey TJ, how far can this go? How did that go? I'm gonna delete all these lines so you can clean it up. So that was your next question, which is
You're freaking to the penny.
okay. Before it even happened, right? That your next question was, TJ, how far can this push up? And that's a great question because now you're thinking your next move, and that's what I want you guys to do. I want you once you're in a trade, I want you to think, how far can this go? What is realistic here? Okay? And the process I do is, hey, after this any aggressive move, can somebody tell me what I do when I see an aggressive move up or down? What is the
50% pullback.
booyah? 50% pullback. Okay? Now let's draw this out. Okay, before I even draw it out, um, what did I say how far this could go, Alex? Right?
How
50%.
far can it go up?
Yeah, on this pullback.
To $21.
21 freaking dollars. Okay. We actually sold a little too soon because you know what? We preach about locking in gains. We sold like I think was in this pop right here, like around 20. Because I ideally my first target was 20. I was like, you know what? 20 is super achievable based on this price action. And then another indicators that I also assured you, Alex, based on this trade, I said, what was the one thing I paid attention to at this level? It wasn't 10 and 20. It wasn't the 200. It wasn't the 50% pullback. What was the one thing I was paying attention to? I was telling you that, hey, this
There's
area,
volume.
was freaking money.
Volume was increasing like crazy.
The volume. So when you get to a zone, like a key level entry, which is already validated that, hey, there's a 200 SMA here on the 5 minute, you have the 20 SMA on the 1 hour. This is the key area that you need to start seeing price action. Okay. And literally, you can watch the volume. Like, this is tiny, like, oh, da 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 da. You can literally, the moment the new candle starts, you can see you can see the volume just like this. Like, when you see a candle like spike, you can see the volume go like this. Okay. Boom, close. The next candle. Boom, grow, like that fast. When you start seeing that at a key level, and I was just telling Alex, load the boat. Like, everybody and their mom said, load the boat here. And
And
then,
I took profits in the middle because I was like, dude, I'm $1,800 profit. So I'm like, dude, take it. And then it dropped down, and at the end, I made 2,275 on the whole
the whole
move
move.
right there.
Yep. And then I called the, hey, this is $21 move. We exited right here in this first move.
Profits in the middle because
Yep. So we exited right here because the moment we started seeing red candles, and we know that based on this blow through, right? I didn't, like, in this case, was a per scenario base, right? Per scenario base. Why did I not take profits here, right here, expecting that 10 SMA resistance? Why did I not take profit here at the 20 SMA resistance? Because of the volume. Like, the momentum of the volume itself spoke that this this resistance does not stand a chance. And what do I preach about breaking support resistance, guys? What do I preach? It needs to have volume. The volume has to spike and able to break through support or resistance. And in this example, I was literally staring at the volume, and I say, Alex, watch the volume. And the candle would go up and down. And because here we're expecting a pullback, and the volume was increasing faster than you could see from the previous candles. And then I said, Alex, it's not gonna dip. It's not gonna dip. Load to get back in, right? We're like scalping this on the way up, right? And I remember right here in this level. I remember right in this level right here. I was like, I want this to dip back down to like 19, or at least down to the what was it 1923? It was exactly. I was like, Alex, I want this to dip down to 1923, and I'm gonna buy this again. And guess what? It left without us because it didn't give me the 1923, right? Because I was like, Alex, this is gonna go without us. I don't want to chase it, and it did move to 21. And you know, it was a good trade. It was a good play. It was a good read. But we respected our based on price action, and we went, Alex went green. How much did you end
but
up
you have to be
walking away with?
so fast though because that happened fast as well. And see, this is what helps when you're so good at sniping these trades and you know the behavior of everything. You know that volume, support 10 and 20 SMA equals that right there. You load the boat and you're not afraid. Like today, you told me not to get out because you know the behavior. You show up every single day. That's period. You see the behavior. You have screen time. You know I went negative 2,600 bucks right there on that drop. But I was like, dude, I got freaked out. I was like, all right, I'm about to get out. But you're like, dude, nope, hold it. It volume is increasing. Hold it. And I was like, all right, man, all right. I would have stopped out, but no, you're like, hold it. And so I trusted you. By myself. See, I don't have enough, practice. But dude, yeah, it came out green today.
Yeah. So as long as I can walk you through the play, and I want you guys to be this confident that even your trade is like red, you have so high of confidence because you've seen it so many times. You've charted it. You've experienced it, right? And this play was literally the same play when when I was playing with Max, and he was down $2 million on GME crash. Okay, let me see GME. I'm gonna show you this play here. The hourly. Let's go in the bigger time frame. Let's go on the daily. Hopefully I can pull this data right here. Let's go under. Can I go 1 hour? Let me see if I can go back that far. Nope, I can go 4 hour. Okay, there we go. Okay, so right here, guys, I was in the same trade as this guy. Look at this. This is a 4 hour candle, right? This stock went freaking from, what was it, 483 right here. We were trading this 483, and we bought the dip right about, and I wasn't using 10 and 20 SMA back then, but I think I bought the dip right about here. Okay, expecting it to bounce up, which it should have. But this was like a flash crash almost. And literally, we loaded the boat. I actually loaded the boat at the 20 right here. And again, I didn't know at the time because I wasn't using 10 and 20. But just based on the price, it halted, I don't know, 3 times. It was like halted here, one, two, and then three. So I got in right here at like 285. I went about 3/4 size in at 189, and then halted again. By the time it resumed, like Max was down like 2 million bucks right here. And guess what? He was like, guys, the only way this is not gonna bounce, more than 50% is if the stock gets like investigated, or the exchange, there's called a T1 halt, which is like they have to send like special agent to the company and investigate the books and all that stuff, and it won't open until like several days or weeks later, right? That's the only way. But he said, if this thing resumes back right here at like, I think he called 100 area. So let me draw a 100 line here, right about here. Just call that line. So he said if this thing resumes at about 100, he was gonna unload all his account, and which he did when he got back to here. He was down 2 million, and then by the time he even sold two, so I was like 240, 250 was target on that bounce, and I was sweating. This was one of my like biggest position I ever traded. I was down like, I don't know, like 17 grand, and I only had $25,000 account at that time. And I was like, what the fuck? And I wanted to sell so bad. And he was on the mic. He was like, guys, I've seen this play so many times. Load the fucking boat. And then the same scenario. I don't know what indicators he was using, but you know, he's turned $50,000 into 15 million. I'm like, this guy knows his shit. And after that, like I went from negative 17 to up to like 12K in this freaking move on this bounce right here. And he went from negative 2 million to up 1.5 million. And that was his biggest day. It was insane to watch. And this happened in minutes, right? It goes from freaking 483 down to like 112, I think it was. Okay? That's where my experience is coming from too. When I see those kind of moves, guys, the volume was ridiculous. Like the volume in this day was like ridiculous. It was so fast, and that's how I'm able to like snipe these trades because I've seen it so many times, right? Screen time, screen time, screen time, and that's how you don't miss opportunities. If the market moved like the way it moved today, guys, I'm gonna bank so much because I like that price action. This is why I tell you guys, hey, this is not a trading condition when there's barely any volume moving, right? Because then it becomes unpredictable. Will it go up? Will it go down? Your odds of your setup is less of a grade, right? Less a grade versus a more volatile stocks. If the price candle moves fast to a certain level, I would take a much bigger position to trade. But if it grinds super slow, 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 I don't know if it's gonna keep continue to grind slow, 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 right? So I won't size up that big. So the more volatile the market, the bigger positions I take because I know I can afford to be wrong and get it back instantly. You can't do that on a slow market. So Is that making sense to you guys?
Yes, sir. Gonna rewatch this like 40 times.
Haha, love it. Trust me, I watch my own videos too.
Heck yeah.
Okay. So, any questions? Do you understand what I'm talking about? Is this gonna give you confidence for your next trade?
Yep, just gonna study and watch it.
Okay. Any questions before we go, guys? Because I am fired up. My pre-workout's kicking in, Alex.
Oh, mine is still pumping.
Awesome, bro. So yes, if your chart is something else, or you're using something else besides the 10 SMA, the 20 SMA, and the 200 SMA, then um, you're kind of on your own to make sense of it. If you're using the 10, 20, and the 200, you have my side to go over. Okay. Again, all the other indicators work, but you just have to spend time trusting it, trusting the setup. So if you don't know the setup, here you go. It's just simple moving average. You have the 10, 20, 200. You can customize the color whatever way you want and save it, right? Once you have it on there, you have your favorite color. And then also the volume profile, or the volume down below. I just have that as regular color. Right here, it shows show or overlap volume. I have it as overlap volume because if you don't, it's gonna look like this. You see at the bottom, okay? It's kind of separated. Um, it's all preference, to be honest. If you like that, that's fine, but I don't. So I just have it lap, so I have the full screen, right? And also I can see it better. I can see it better and how fast the volume climbs, right? I can see it better. So that's the setup. Um, Again, just three simple moving averages, 10, 20, and 200. Get that set up, and then that's pretty much it. Any question?
How much did you make today on the Indo?
I think it was like 8K or something.
Because it didn't post on your.
Oh, yeah, I didn't post it. I was trying to log into my calendar.
So you almost made like 16 grand today.
Yep, 15 yesterday and 16 today.
Amazing.
So there you go, guys. The money on the other side will come if you focus on your setups and really respecting your um, support and resistance based on the 10 and 20, and leave the emotions out. All right. So go chart it, go look at it, you know, dream about it, and come back tomorrow with ready to play mindset. Cool.
Thanks, bro.
All right. Thanks, everybody. We'll see you
See you in the
tomorrow.
morning.